For those of you who aren't aware, Charlie is joining TIA Ventures as a venture partner. Charlie has been working with some of our portfolio companies for some time now, and he has extensive experience as a founder and a builder, and now developing his skill sets as an investor. But on that note, Charlie last week shared on Slack with us an amazing article that he wrote based on some of the perspectives he came away with during some of the time that he's been working with us. And I thought it was very valuable and would like to share it. So, Charlie, from your perspective, how has it been to change from builder and founder to investor?
So the article says there are 7 observations I had, but I think I can distill them down into 2 main thoughts. And one of them is a little more introspective. So as a founder who's pitched investors in the past, your natural impulse, I think for a lot of us, is to kind of have your guard up and be kind of weary because you have a business and you want to, move forward, and the investors candidly, you want their money. Now that I've been on the other side of the table, the thing that I've noticed is most difficult is, as an investor, I want the founder to trust me because I really empathize with them and how hard this is. I have a lot of questions I'd like answered as well because I want to know, like, do I think this is a good investment? But if I machine gun them with questions, I think that's probably not going to be received very well. And so there's this really delicate balance between wanting information, really wanting to be empathetic, and wanting to build trust. And doing all of those things at the same time is really hard. And I don't think I recognized how challenging that was. So, ironically, I now have more empathy for investors, which I had, let's say, very little before, about the difficulty of maintaining a positive rapport and also getting answers. The second thing, which I think is really important, is I think a lot of founders don't necessarily understand the venture capital business model, where they have a lot of LPs who are effectively, their stakeholders as well. And those people who are investing in early stage are looking for big returns because it's more risky. Otherwise, they'd invest in like the public stock market or something. An early stage investor needs to think to themselves, can this be $1 billion company? Can I get 100x return? And there are some great companies that just don't fit that profile. And if an early stage investor isn't interested in your company, it doesn't mean that you have a bad company. It just might not fit that profile. And I don't think that's clear to everyone. So I would say those 2 themes are kind of the macro takeaways, but I have 5 more very exciting ones for those who want to be left on a cliffhanger.
For those that want to read it, we'll be attaching the link of the article, and I highly recommend. So, again, Charlie, welcome to the team. It's been amazing having you.
Thank you.